Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, November 1st at about 12:30 p.m. Eastern. Well, doubts that the Federal Reserve will go ahead with an interest rate cut next week fell away today after the jobs report showed U.S. employers added fewer workers in October than in any month since December 2020. The 12,000 increase in non-farm payrolls last month was far short of the 113,000 economists had anticipated, even after they tried to account for tens of thousands of workers kept off the job by a Boeing strike and the impact of two large hurricanes in the southeast. So, on that note, and it's a somewhat cheerful note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. And of course, we know that many stocks will follow the SPY higher and lower. Actually, they say in bull markets, 3 out of 5 stocks will follow the S&P 500 higher, while in bear markets or downturns, 4 out of 5 stocks will follow the S&P 500 lower. So anyway, that's a little gem for you. Today, when I captured this chart, the SPY was trading at $573.48. It fell, actually, as you can see, it's been walking up since September. It's been walking up its 20-day moving average, as it's done quite a bit, even almost in the last year. It's been wandering up its 20-day moving average, but on Thursday of this week, it fell below the 20-day moving average and closed just atop the 50-day moving average at about 568. See, it's right on top of the green line, the 50-day moving average. Now, this is the first drop below the 50-day moving average since the September downturn. So if we look back quickly to the April lows, just very quick, remember with me that the April lows for the SPY came in at about 494. And the SPY ran up from there, as you can see, and we know it ran up mainly the 20-day moving average and fell back down again. But it's run up, and we'll talk about the fall down in a minute, but it's run up from April lows all the way back up here to April highs on October 19th, right there, that little green candle. That was the all-time closing high for the S&P, the SPY. That came in at $584.59. So from the April lows up to this high, we've had an 18% gain, and that's nothing to complain about there. We also know that after the SPY started walking up the 20-day moving average, the red line, that we had quite a fall down here in a very dramatic drop in August. On August 5th, it came down here to open at $511.64. So that was a pretty big wake-up call then. But then the SPY in the next 3 weeks rallied up to 565, almost even with these July. It was, at the time, it was an all-time high. And then after it got back up to 565, the SPY consolidated through August. Then on September 3rd, of course, it started down a little sooner. On September 3rd, it rolled over, dipped below the 20-day and the 50-day down here, and then walked up the 20-day, turned around, rallied again, then walked up the 20-day, making higher highs again. So we've had a boatload of higher highs here. We can't complain, actually. I know the August fall here was a rude awakening, but we've had higher highs here and higher lows, except for this dip and another quick one in September. On September 3rd, it rolled over. It came below the 20-day and 50-day, and then walked up the 20-day again, dipped a little bit, but up to where we walked up the 20-day again, back up again to the October 19th all-time closing high at 584.59, pulled back a little bit, and then fell down as it did again to where we are now at 573.48. Now we do have for nearby support here. Let's talk about the resistance here. The nearby resistance here, so when and if, and it will, the SPY starts back up, it has near-term resistance here, right here at 578, 579, this consolidation, and then again up to the highs at 586. Nearby support, our nearby support here is obviously the 50-day moving average, which is coming in at 568.74. Call it 569 if you want to. We do have the, and that's in line here with this little dip, so right here, and the 50-day moving average, of course. We do have the September low coming in at 534, and this September low here, and coming in at the same level as the 200-day moving average. So these are all potential support points. We do have another week of earnings announcements coming, and of course, we have the election coming this coming Tuesday. No one in the world knows what's going to happen right at that time or after that. So I'm just saying, especially with earnings season still continuing on, it could get a bit more hectic out there. So next week, ideally, to keep its uptrend intact, we want the SPY to remain above the 50-day moving average. In a perfect world, that is what we want. So that's 568.74. Call it 568 if you want to. We would like this. We always want the SPY to stay above the 50-day moving average. And so just, I don't feel the need to back up the truck right now to buy anything in particular in huge lot sizes. So just keep your seatbelt fastened, mind your protective stops next week, and stay tuned. Our next chart, as we always do, is the Invesco QQQ, symbol QQQ. Of course, this follows the NASDAQ 100, the top 100 non-financial stocks in the stock market, including large cap momentum stocks like NVIDIA, Meta, Apple, Alphabet. Now, when I captured this chart today, the cubes, as we call them a lot, the cubes, we're trading at $489.29. Now, just like the SPY, and these usually run sort of kind of in similar patterns, just like the SPY on Thursday of this week, the cubes fell below the 20-day moving average. Excuse me, when the Qs were trading, fell below the 20-day, goodness, this past Thursday. But stayed above the 50-day moving average, and as you can see now, the 50 days coming in right now at $481.90. Call it $482 if you want. It's the first time, like the SPY, the first time the cubes have fallen below the 20-day since back in September. Now we can quickly look at the April low back here that came in about 413. So from that April low, we do know, looking at the past history a little bit, that the QQQ, the cubes, climbed in a dramatic uptrend, up its 20-day, but even higher. And when you look at this angle that the cubes traded in from its April low, and coming up as dramatically as it did, look at this angle. Just know that when you see an angle this steep, you want to, participating is a whole lot of fun, but no angles this steep do not keep going forever. 45-degree angle on this chart can stay in play longer than a price move that goes at an angle this high. So when you see a great big red candle in a move like this, it's always a good idea to kind of pay attention. So anyway, the April low was at 413. The cubes climbed up to a high, July high at 502.96. That's a 21% gain right here. When you get more than a 20% gain quickly, it's always a good idea to raise your protective stops. Nothing to complain about, just be wise. Then, of course, we know that it rolled over dramatically and did a dumpster dive down to August 5th, where it opened down here below its 20-day moving average at $424.71. Then it rebounded very steeply in the next 3 weeks, back through the moving averages, back through its 20-day, back through its 50-day, and made an August high up here at 486, rolled over to a low here of 448, plenty of excitement, then rallied back to September highs up here at 494, then back down to the 20-day moving average, and then has been trying to walk up that 20-day ever into October. But you can see when price gets closer to a moving average, especially one like the 20-day, which is short-term, considered to be short-term, when price keeps getting lower to it and lower to it, it's like the analogy I make when we're walking up a staircase. Yes, we can walk up it pretty far, but when we get tired, our legs get tired and we start walking closer to the steps. We don't raise our legs as high. Price doesn't keep going that high either. At some point, please remember that the markets of industrialized nations move in cycles, and that's short-term as well as long-term. So it's going to get tired at some point, especially after huge rallies like the April to July rally that we had. Stocks have gone up quite a bit. And we just need to start being careful when we see a little weakness come in with our when we see that come in, be careful with our short-term trades. Now, at nearby resistance that the Qs have right now is at 578, 579. I'm sorry, I'm at the wrong thing here. Potential resistance here, right here is at 501. That's what I meant to say. Back up here to the 502, 503 that we have for the all-time highs for the QQQ. So we have support down here at the 50-day moving average that's coming in again at 481.90, call it 482. And then we have again 200-day moving average coming in at 458. I don't know that we have to worry about that right now. I certainly hope not, but there it is if you need to know. So again, please mind your protective stops and know, of course, to be bullish, we would like the Qs to remain above their 50-day moving average at this 481, call it 482 level. But we do, again, have the election next week, and we do have more earnings announcements coming in. So you might want to just be a little careful and mind your protective stops. Our final chart today is a daily chart. We've traded this before. This is a daily chart of the Global X Cloud Computing ETF, symbol CLOU, and I'll just call it the CLOU as we talk. So you'll know the CLOU has 35 holdings. Top holdings include Wix, Box, Digital Realty Trust, and by the way, real estate is becoming more and more digital, so that's something to know about. Shopify and Zoom Video Communications. Now, if you look, it's not here, but if you look at a long-term monthly chart of the CLOU, we would see that the CLOU, the CLOU, opened at about $15 in 2019, then ran up to all-time highs in November of 2021 at $32. So it basically doubled. Then it fell down for the next year or so, back down to about 14, and then gradually rallied back up to where it is now. And we can see it right here. It's trading right now at $21.29. You can see it came down here to August lows at about 17, but jumped up dramatically back up to about $20 here, fell below, but dramatically again came back up over the 50 and 20-day moving average, and then is creating kind of a little uptrend here, trying to keep above the 20-day moving average. What I like here is it looks like could be a decent setup. That you see a potential, actually it's kind of formed here. Do you see an inverse head and shoulders here? Whoops. Didn't mean to do that. Inverse head and shoulder here. The 200-day moving average is kind of drawing the neckline across here, but this looks like it could be a breakout as long as it doesn't get interrupted of an inverse head and shoulders, which can be very positive. So I want to keep an eye on it. I know we have a lot going on in our country right now, but I want to keep an eye on this. I'm not going to force any trades, but in the coming week, if the CLOU, the CLOU, can stay above its 200-day moving average, which is coming in here at $20.57. So that's the CLOU 200-day moving average coming in at $20.57. If the market remains reasonably positive and the CLOU can stay above this 200-day moving average, I will add a very small position just because of what's going on of the CLOU to my trading portfolio with a stop just below the 50-day moving average. The 50-day moving average is coming in here at $20.31. I'm going to put my stop at $20.20. If you want to make yours tighter or wider, that's certainly up to you. Now, if and when the CLU can rise above $22.50, that's from prior resistance, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the CLOU in the coming week. And now, check out this news from ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to Swing Trade Successfully is a 3-part program, and that's right here. How to Swing Trade Successfully is a 3-part program in which you'll discover my swing trading sleeping tiger setup that I still use to trade swing trades, and I've taught for years and years. Swing trades, as you may know, usually last from 3 to 7 days, and we're looking at an uptrend many times on a daily chart. And what we do here, especially if we're not sure where the market's going, is we find a good uptrend just starting, and then, as I like to say, we take the center out of the Oreo as it moves up. And I like that because it keeps me in the market when it's moving higher and out of the market when it isn't. So I like that. And you will learn with this how to trade them successfully. You'll also discover where to find the stocks poised to rally, when to enter, and the best time to grab profits. Our newly discounted price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free, and that's the software I use, of course. From our ever-popular 7 steps to successful trading, again, to how to swing trade successfully, trade the trend for profits, 2 profits, I love that, how to read charts, an absolute necessity for anybody who's trading, 3 winning setups, another great training for short-term traders, and how to bottom fish like a fro, another one of my favorites. Find out how these online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access so you can learn at your own pace. Be sure to check them out by going to the link on this screen right up here, or easier still, just click on the orange button below. Until next week out there, be careful, keep green on your screen. I'm Toni Turner, and this is The Market Now.